Morning, morning, morning. How we doing? Sorry, I'm late. Am I late? Only a minute. That's not too bad, is it? So I had a website problem before I came on. My website, for some reason, was all locked up. It's all back now, though. Not quite sure what happened there. It all went completely wrong. The server locked up, basically. So I've just had to reboot the server. Anyway, I'm here. Morning, Danny. Morning, Mumo. Morning, Barrier Man. Morning, Barrier Man. Uh, Morning, Gregors, Virginia. How we doing? Right. Morning, Ryan. Let's have a look at the indices. Start off with. That FTSE's broken long this. Oh no, sorry, I haven't broken long. FTSE's hedged. Wow, look at that. Wow, big move. 23-point move in the FTSE at the open as a whipsaw. So hedged on the FTSE. Wow, a lot of volatility this morning. How can I have a closed profit? Oh, what's going on there? Hang on a minute. That's closed out a trade. Something's gone weird this morning. I didn't see the open, but it looks like whatever this massive volatility spike is happened so fast. The EA triggered the longs and shorts pending orders. Obviously, what the EA does, excuse me, is it puts the trades in place with their stop losses so it can calculate the risk. And then it removes the stop losses. But it looks like within a tick or two, before it managed to get the calculation to remove the stop losses done, it's actually triggered the stop. So that must have just opened and gone like that really quick. So I've got 2 shorts and 1 long on, which is lovely because it's broken long. I'm going to have to take a loss on one of those shorts. That's annoying. Wow, I've not seen that before. Something that must have been a massive spike. Did anybody see that at the open? What happened at the open? Big volatility spike there. So I need to get out of this at 5R. I'm just going to let that one run. I need to deal with that separately because that's a real bodge this morning. I don't know what happened there. So we broke out the monthly level. Let's look at the hourly. We broke out the monthly level yesterday. So this is the 2-month low, which we broke out of. Yeah, we had obviously that big drop. So market's not liking this budget, as we know, so far. So it looks like we're pulling back on that today. That's actually, I'm just going to move this because this, I need to spend a bit of time looking at this morning. We've got a weekly level coming up within ADR. Then we've got that level there, which is a little bit stronger. Sort of around this area here, which I suspect we'll get to if this does try to pull back today. But the FTSE obviously is linked to the pound. And the pound has been, as we know, collapsing quite hard. So I got out the pound odd yesterday. Big drop down on that. Obviously, it looks like the pound is starting to pull back a little bit this morning, but that I suspect is what we're going to be doing on that. So the FTSE obviously is reacting to obviously what's happened with this budget. To be honest, if I can get out of this morning with a small loss of £300 or £400, I'll take it because that's far too volatile this morning. So I'm going to look to get out of the long trade if it does a rally. The trouble today is obviously we've got non-farm payroll this afternoon, so everything's going to move a bit later on. I'll leave that hedge for the minute, but had to take a loss of 340 on that this morning. Broken long on the DAX. DAX had a big volatility spike at the open look as well. So big moves this morning going in. So looking for TP1, which will be up at that kind of level below the previous day's low. See if we can get a bounce off of that. ADR obviously to the upside is the gap fill. So if that continues to break long, that should be fairly easy. So if I can get that to pay for that this morning, pretty much that'll be a good job. Obviously everything's at the moment on a downward spiral. So yeah, not great breaks this morning. Obviously they are very good breaks this morning, but is anybody trading this morning? Did you get whipsawed on that? I'd imagine everybody got whipsawed on that this morning. Very, 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 very volatile move, that. Yeah, I might let that trail because then it'll automatically get me in on a reversion on that. I'll have to keep an eye on that one this morning. Right, so news today. Obviously today is Friday. We've had the Swiss CPI this morning. Not trading anything else until I'm out of the US pairs. Yeah, no, good plan. CPI this morning for the Swiss. It's a bank holiday in Europe. French and Italian only, not the DAX in Germany. So the CPI numbers came out this morning. As you can see, we've got massive moves on ADR. So I was just doing some testing this morning. Let me just get rid of that. So US dollar Swiss is up at 175 ADR. Huge spike up there on the US Swiss. We know we've got US strength still at the moment, so that's why that one's moved further. New Zealand Swiss also big hit to the upside. Pound Swiss, so everything moving up basically against the Swiss, and obviously the Swiss yen coming down. So all these moves have been caused by this CPI number that we've had this morning, and the CPI basically is negative 0.1. We're expecting to come out at 0. So basically inflation coming down again much faster in the Swiss than forecast. They've dropped their interest rates very quick to get this down, and obviously now you can see inflation's just getting to the point where you're getting to the dangerous zone where you're going to disinflation, which basically you can start to contract your economy. So they need to do something about this, the Swiss. I'm not quite sure why their inflation is coming down quite so fast, but obviously they've got low interest rates. Dropping interest rates is the way to control it. If necessary, you go to negative interest rates, which is what Japan's been doing for the last 20 years, which keeps your inflation propped up. So quite rightly so, markets selling off the Swiss this morning. Because this is a worse than anticipated news, and obviously the two largest fundamental drivers are inflation and interest rates, there's a probability that we might get a sustained move on the Swiss to the downside. Obviously the bank, the Swiss National Bank, they can manipulate their currency as they see fit, so they will prop the Swiss up when they need to, and they will dump it when they need to. So just be aware of ADR reversals on these today. Make sure you've got kind of a level that you can see you're going to get some help from limit orders that are sitting at those levels to get a reversal underway, or a pullback at least. So big moves on those Swissies. We had yesterday the unemployment claims come out as a positive, and we had the PCE coming out as expected. For the US, the Canadian GDP came out at 0, which is good. So we didn't get an overshoot on that. So all the US pairs basically, as you can see, wow, that's a pound. Let's ignore the pound for the moment. All the US pairs, we had quite a lot of volatility, but didn't really go anywhere yesterday. US dollar CAD, we had a massive whipsaw on that one. So we hit that monthly high exactly. Yeah. So we tapped into that to the pip, and the limit orders triggered and drive that down very quick. So we had that big drop off the limit orders. So that is now a double monthly high, because yesterday was the last day of the month. It's now November. So we've got a double monthly high at exactly the same price point. So we've pulled back from that. We didn't obviously go any lower. So today is key. This non-farm payroll today is either going to send this up into new highs, which will give it a new lease of life, or non-farm is going to come out and drive back down. So very, 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 very important news this afternoon. This unemployment rate, if we get that unemployment rate going up, it will be negative US. If the unemployment rate comes out as lower, it will be positive US, because higher unemployment means they need to reduce interest rates, which will devalue the currency, and vice versa. However, the caveat we've got at the moment, obviously, with this thing is this massive rally that we're getting off the back of the elections, which are next Tuesday. So, yeah, I said to somebody in the Discord group, remind me in 4 years' time when there's a US election not to trade that month, because this move is I wouldn't say, I hate that word, unprecedented, but when you look at it, yeah, I mean, it is unprecedented. The levels that we're looking at here just don't happen. Very, very, very rare. So yeah, big move. So this is the saving grace. You can see I've got a stop very tight above that monthly high. To be honest, I'm 60-40. I'm going to get stopped out on that today. But we'll see. We'll see what happens. So there's your news today. Obviously, we've got the PMIs coming out as well at 2 o'clock. Obviously, if the PMIs come out in the same direction as the unemployment, then we're going to get a very big move today on the US. I got a feeling the market is just looking for a reason to try and scale out of some of this US dollar. Obviously, when you've got such a large position on in one direction, you've got a large P&L sitting there. They're going to want to get some of this off by Tuesday, because Tuesday next week, stroke Wednesday, we're going to have a decision on the US, and it's either going to send the US in one direction or the other. If I was a central bank sitting on well, not a central bank, but a bank or an institution sitting on a large pot of cash and P&L at the moment, and I'm seeing the market flatten out, I'm going to want that in my pocket by next week. So some of these big parabolic moves that we've had, you can see that the profit take move is already underway, but I'd want to be out as much of that as I can, and flat, because if the election goes, the banks and institutions are no different to you and I in the fact that if the election goes the wrong way to your position will move. Everybody's position is going to move. They have the advantage of being able to move the market, but when there is such a tidal wave of movement, as you can see by what's going on with the pound at the moment, if you're the wrong direction on that, you cannot hold it. So I always use the analogy of 10 central bank or 10 major banks. Think HSBC, Citibank, Barclays, those sorts of people. These are the guys that are moving this market. There's 10 big ones that have enough volume and market maker desks with enough volume going through them to move this thing and tick it every day. If 8 of them are one way and 2 of them are the other way at the time an election hits or a budget hits, these 2 haven't got a lot they can do about it, because the water is coming fast. You can't push it back. So, it really depends what the positioning is of the banks at the point when that news comes out on the election. But for safety's sake, you want to get yourself into a position where you can not get hurt too badly if it goes the wrong way, because we don't know which way it's going to go. It's 50-50, isn't it? One of them's going to get in. And I get the feeling if one of them doesn't get in, there's going to be a little bit of rioting. So we'll have to wait and see, won't we? It's going to be an interesting week next week. So we got some potential news this afternoon, which has got the potential to really start a move on that US dollar. We saw it potentially kicking in yesterday, a little bit stronger. Look at the hourly. So we had nice increased volatility. We've had nice increased volatility the day before, and it's at the point now where we are getting reverse alerts. We are holding levels, and it is starting to bottom out. So it won't take much for this thing to move 200 ADR by next Tuesday. Yeah, you see my targets on this one up at 150. So it's not going to be difficult to move it, but it needs someone to kickstart that leg in. Same with the US dollar CAD. Look, so you can see we've obviously had the big 9-day run. We sat around for a week or so deciding what to do. We've then gotten back into another run, which has been kind of when the run up started. 8-9 days again. It's basically an entire month, isn't it, that we've had of movement. We've put in a new high, and then we put in a higher low again, and then the next day we've put in a new high, but we've put in a lower low. Yeah, so that yesterday was the first outside bar pattern that we've had. We actually had one there as well, but it ended bull. But yesterday we had an outside bar. Look at the daily. Going in there, which is indecision. Yeah, so inside bar and outside bar patterns are indecision. Symmetrical triangles, expanding wedges. Yeah, they're indecision candles, which basically means there's potential for a turning point. So this is the second one we've had this month, and it just so happened it's happened at the end of the month. Yes, it did end bull, and everybody reading this is a bullish engulfing, but people that know about price action will know that it's not. It means the market really doesn't know which way to go at the moment. So today's candle on unemployment, if it goes bear, the market is going to see that as a sign of weakness. These guys are going to want to get out of some of that. Yeah, so there's a good chance if we get the news in the right direction today, and that's a big if, that we could start some kind of cascade effect today. So we'll see. But yeah, so that's your news for this afternoon. We have obviously just had the Swissy, as you can see, the Swiss franc not doing particularly well on that. The tensions are starting to get worse in the Middle East. Overnight, we've basically, there's no other overnight news, but there you go. That's the one I was just going to talk about. Iran is preparing a major retaliatory strike from Iraq within days. And Iraq seems to have become the proxy for both parties here, because the Iranians started using, are going to use Iraq to hit Israel, and the Israelis last sortie went in from Iraq too. So it's all starting to bubble again. I suspect over this weekend we're going to have a load of missile strikes kicking off. Obviously, the Russian situation is escalating fast. The US came out yesterday and said if the North Koreans, who are dressed in Russian military uniform at the moment, are actually involved in combat, then they are legitimate targets. So basically, North Korea now seem to be fully involved in Russia. So that is escalating. It's only going to take one wrong bullet in the wrong direction for the UN to get involved, deal with that, and the whole thing could collapse. So all these markets at the moment, if you look at yesterday's fear and greed index, the whole lot is sitting in, oh, actually, it's not as bad now. As like the crypto is sitting in greed, it always is. But we're moving back into neutral territory now. Markets getting jittery again, and when you get jittery, you get expansion in volatility. When you get expansion in volatility, you get big reversals tend to start on whatever moves have happened. And obviously, with the elections coming up next week, is potentially a powder keg. So yeah, flat as fast as you can, basically, and sit around for a week. That's what I'm planning to do. But obviously we need the market to move us first. So ADRs today, obviously everything's about the Swiss. We got Aussie New Zealand as well, actually. So we just got an ADR on the Aussie New Zealand. So that's a big spike up into that propulsion, which they sold. Now we're back down at ADR. So not a great one to trade that one, but you could drop down low time frame, look for a reversal on that. So yeah, so there's your ADRs. RSIs, we haven't got a lot on at the moment. Euro pound was the main one, as you can see, but that's already playing out because of obviously this massive pound move. So we had the extension of the pound leg, and that's really kicking off now. That pound really moving. Is that the euro moving or the pound? Oh, it's everything today, isn't it? Quickly look at what the pound's up to. Yeah, so that retracement's starting to kick in on the pound now. So pullback potentially for next leg entries on the pound today. So there you go. Stalling out on the FTSE. DAX, nice clean break. So my goal today is to try and get the DAX up to a level where I can just offset that hedge today. Because that went wrong today. That's the first time I've seen that. The trouble with obviously automated execution with anything is it's only as good as the market data provides. I have seen it once before where we've had instances where the EA just couldn't react fast enough. The trouble with all trading software, not just MT4, but every piece of of trading software and charting software out there it all works on tick. So if you get a tick and then you get another tick, which is miles away, EAs execute on tick. They do things on tick. And when you get huge volatility and within that you may get a spread for one tick, which you won't even notice because it's so fast, you get instances where you get these little anomalies where either it can't do a calculation or it can't remove a stop or it can't do something. So this is why full automation is very, very difficult to achieve. You've got to be watching what's going on because you've got to react to it. My job today now is to try and negate that using that. If this had broken slowly, it would be a lovely 2-hour target hit and we wouldn't be talking about it, but it didn't. The way the market moved today, it just wasn't conducive to auto trading. So just have to deal with it as it happens. But we'll see where those break to. If anybody's got any pairs they want to look at, let me know. Morning, everybody else. Not trading anything until I'm out of these US pairs yet. I think the swaps filter is an excellent idea. They're killing profit. Yes, I'm going to go through the position trader EA in a second and just look at the differences that I've added into it. I'm also going to add in, I think I'm going to add an info panel in there for the tester, which will be helpful. Morning, Georges. Morning, Cyril. What's your target on the Swiss? So the Swiss yen target at the moment, I'm just going for the recent lows. Whoops. Here. So it's 125 ADR. My initial target I had on this was down here, which was obviously optimistic, let's say. But we had such a big move on the yen yesterday and a beautiful market structure pullback. And it looked like it was going to try and make a new low. It has just made a new low, so we got a new lower low in. But I'm just going to try and get down to there because the yen is going to move next week. When that dollar moves, they're going to need to put the dollar somewhere, or they're going to need to add to the dollar. So yeah, I'll be looking at just trying to get out 125 ADR. So expect the propulsion gap to form here, and then I'm looking for that propulsion gap to hold. Be watching that area, but 125 ADR on the back of that news today is not unachievable. Morning XRF news. Yusuf, morning Shyam. Stuck in the New Zealand dollar, US dollar, and pound US dollar. Don't know if to close on or no before the news. Up to you. Gold, I don't trade, Shyam. Can't help you with that. Pound US dollar. I mean, the pound obviously is bearish at the moment. So, or now, the market not liking what happened in that budget, as you can see. But, if you're going to close a trade before the news, one of two things is going to happen. It's going to do that, or it's going to do that. So this afternoon, when those unemployment figures come out, if those unemployment figures are not on forecast, it's going to move up or down. If you get out before the news and it moves your way, you're going to kick yourself. If you get out before the news and it moves against you, you can place a stop loss. Yeah, but I wouldn't get out before the news because there is a probability that it's going to go your way. Yeah, probabilities are 50-50. Every single thing that you do in trading has only got two probabilities. It's either going to go up or going to go down. That's it. It can only do two things. So one of those two things is going to happen to you this afternoon. Which one is nothing to do with you, me, or anybody. It's to do with what that news comes out as and what the banks decide to execute from their orders to this afternoon. That's it. So up to you what you do with it. It's all down to you and your risk and your management of the trade. I'm in the New Zealand dollar, US dollar at the moment, long. If it pumps, brilliant. If it doesn't, I'll deal with it. But you know, like I say, a lot of this parabolic move is got to unravel at some point to some extent before they can move it on, because there's no one else. There's just not going to be any volume left to do that. So they've got to unravel it. The market moves on news. So if you look at it from what a market perspective, from a bank's perspective, if they've got a move on and the other banks get behind the move, it will continue. If it continues to continue, they will stay in it. If the news comes out, which means that there's going to be a weakening of the New Zealand dollar or a strengthening of the US dollar, and they're in a nice position, the other banks and other institutions will start to get involved because of that news, which will push their position further. So they will add more into the position. And this is what squeezes are. Squeezes tend to be and are the result of continuous fundamental shift in the same direction. That's all that happens. This thing only goes up and down because banks and institutions push it based on the directional bias of whether they will make money or lose money, depending on what a currency is going to do. You can tell what a currency is going to do. If a bank's going to drop its interest rates continuously, less investment will come in and the currency will devalue. It's very simple economics. When you boil it down, there's a lot of moving parts. But whether this goes up or down this afternoon is nothing to do with you, me, or anybody else. If the news comes out as negative, it will go down. Simple as that. Actually, if the news comes out as negative, this will go up, because obviously if the US dollar news is negative, then the US dollar will weaken, which means the New Zealand will rally against the US dollar. So, but what you do, you know, making money is about managing risk, or losing money is about managing risk. Badly, as I've done this month. Euro US dollar is close to TP. Cool. Yeah, I've had a break even on that yesterday, and this morning I was asleep, unfortunately. I didn't take that break even yesterday. By the time I identified it, it pulled back, so I couldn't take it. So I couldn't actually get out there. Then last night it pushed up. So I decided to leave it on because I was expecting accumulation in Asia. Asia pulled back a little bit. So had no exit on it this morning, and now it's putting down because the Swiss franc's dropping, and obviously the euro and the Swiss franc are related. So yeah, but I'm looking basically, it's still, if you look at the market structure on this, since we had the market structure reversal in there, we obviously have been putting in higher lows continuously, and we've been putting in higher highs continuously over there. Yeah, so pullback long, but again, that is what is going to cause the pullback or the continuation. Yeah. Negative news on the US will be up here. Positive news on the US will be back down. Hopefully the news goes the right way. Pound movement is not because of the interest rate. Yeah, well, partly the pound movement is because of the budget. So the interest rate decision is next week. Now, Bailey has got a very hard decision now next week. So the interest rates change on Thursday next week. We've got a double whammy Thursday next week as well. Look at next week. I mean, if there's a week that you do not want to be trading, it's next week. Yeah, if you're going to take a week's holiday, that's the one. I am. It's just nuts. We've got 3 interest rate decisions. We've got the Australian interest rate, the pound interest rate, and the US interest rate. Yeah. That comes out on the day the elections are. Obviously, we will get a very good indication of the elections as the day goes forward, but we're not really going to know the results properly 100%, are we, until Wednesday? And then we're moving to a double interest rate decision. Yeah. It's just next week is absolutely mental. So basically, the Bank of England has to adjust interest rates based on two things, basically inflation, which drives the economy, and borrowing from central government. Yeah. So if the Bank of England drops its interest rates too fast, it will make the government harder, basically, to make money. So what Bailey's got to basically do next week is now not only look at what he was planning to do because inflation is dropping nicely, he's now got to look at what's happened in the budget. Yeah, he wasn't expecting suddenly a whacking great load of extra borrowing to come in, or maybe he was, I don't know. But very highly likely that we're going to get 0.25%. But now we've got the new budget, he might turn around and go, do you know what? Sorry, guys, we're going to have to keep it up there. Because now inflation is probably going to rise because we've got more public sector borrowing going on, etc., etc., and it's all going to change. So next week is a real lottery as to what they're going to do there. I have no idea, but the banks are certainly factoring in that there's going to be a drop. I think they may factor in that the drop will be potentially faster this time round and then not move. If you look at financial juice always gives you an indication. So there you go. So traders pair Bank of England rate cuts to favour 3 more by the end of 2025. Yeah, so that is bearish. So if Bailey comes out next week and says, okay, we're going to do 0.25% now, it's November. If there's going to be 3 more by the end of end of 2025, I read that wrong. 2025? That's next year. God, we're going to have more than that. Yeah, okay. So what my point is they're going to give you clues. If they are talking about rate cuts, it's negative. If they're talking about rate increases or rate freezes, generally it's positive. So more rate cuts basically is more negative for the pound. If you go and look at I'm just seeing if that's Boeing. Why is Boeing? No, it's all Boeing basically instead of Bank of England. But yeah, if they're basically talking about cutting rates faster, obviously that's going to be negative. So you are going to get the market being more bearish and more cautious, basically, because it's not good. What she said is not good. We knew it wasn't going to be good, but it's how bad it's going to be. That's what we don't know. So negative pound moving forward. Be much more interested in shorting it than longing it. Because the traders believe that there are 3 more rate cuts this year. Yeah, no, it's not 3 more rate cuts this year. That's 2025 next year. I don't know what that's all about. You can't forecast 3 more rate cuts within the next 14 months. That's ridiculous. Stuff changes way too fast for you to be able to forecast that far into the future. That's nuts. There's going to be 1 or 2 more rate cuts this year. And that's the unknown. Russian and North Korean foreign ministers to hold talks in Moscow on Friday. That's today. Oh, blimey. I don't think it's going to matter about the markets. We have a nuclear war soon, aren't we? Right. So anybody got any pairs they want to look at? Let me know. Okay, so such a shame about that whipsaw this morning. Lovely break on the FTSE this morning. Nice break on the DAX as well. So basically, I'm just looking to try and get a $500 win on that. NASDAQ. Anybody get on the NASDAQ yesterday? That was the fastest $900 I've ever made in my life. £900 rather. I've ever made in my life. 20 minutes. It was clean. Yesterday was just a clean break, straight down. 20 minutes. It was unbelievable. The best break I've seen for a long time. Opening range breakout, short, bang, TP1, TP2, done. I missed half the move, but I got out of 5R, so that'll do me. But wow, what a move yesterday. So be careful this afternoon, because obviously this afternoon is going to be a very different story with non-farm payroll and the unemployment rate. We just tapped into the monthly level there on the FTSE, starting to get a little reaction at that. Weakness on DAX as well. Right, so there's no point in going through all the pairs today, really, because this afternoon it's all changed. So again, we'll wait and see what happens with the non-farm payroll. And obviously the unemployment rate is what the market's looking at, not the actual non-farm payroll figure. So we'll see what happens with the unemployment rate this afternoon. We've got PMIs as well, so there's the opportunity this afternoon for that to come out fairly neutral or ever so slightly negative, and then the PMIs to send it screaming straight back in the other direction. So if we get both news items, which is going to be that one and that one, going in the same direction, we'll get a very strong move like 150 ADR or so today. And if that does happen and it is negative US, there's a good chance they will start to unwind those US positions before next week. So nice rejection at yesterday's highs. Look, going on at the moment, previous day high. Yeah, so good looking short today. And obviously if that news comes out negative, we're going to break lows. So I'll be watching that propulsion move here. This whole thing is one big propulsion move here. Yeah, which is 150 to 200 ADR. So that's where I'd expect us to get to this afternoon if we get negative news. And obviously just watching this low, which is about 130 ADR today. So potential for something along those lines to hit today. But we'll see what happens with the news. So I was just doing some testing this morning with a position trader EA. Obviously, for those of you that know, I've just made some amendments to it. Yesterday I launched 1.71. So new features and functionality in the position trader EA. On the additional entries now, you can select whether you want a single candle close above the next entry line or use open. So the way it was working was when you get above, so when you get your next entry line, probably better to actually show you on a chart that is live, like Swiss yen. Swiss yen. So Swiss yen, obviously I've got shorts on. So there's your next short line there. Yeah. So the way that the current functionality used to work on 1.7 and before was if price pushes up above this area and the open of the candle is above that line and you get a signal, which is the moving average cross, it will enter the trade. Basically, because price is opened above the minimum distance, it will, when that candle closes, if the signal is there, it will get you in. So there's an option now that the close of the candle has to be above that line, which means that the price action has to have moved further for when you get that signal. So it means that your minimum spacing between your trades will guarantee be a minimum of the amount you enter. Because the problem some people have brought up, which is it's a problem sometimes it's the best thing in the world. Yeah, but if the price opens there and you get a news candle which moves an ADR, your entry will be here. Your last entry was there. You're getting in at roughly the same spot, but the open of the candle was above the distance. If the candle is huge, obviously you get to the same place. So with that new input now, if you set that to true, that will not trigger a trade. It will have to be above that line. Yeah. So it's good and bad. Sometimes it's a good thing. Sometimes it's a bad thing, because sometimes what you'll see is price will move up above that area and it will sit around, and then you'll get a push down to here. You'll get your signal and that will trigger an entry short, and then it will cascade down. You won't have got that entry if you said I've got to be above the line, but that would have been a bloody good entry, wouldn't it? So sometimes it's a good thing, sometimes it's a bad thing. Yeah, you can never have a best way to do something. It's just a different way of entering. So that is an option you've got now in that 1.71. The other two options I've entered are spread filter. Swap filter. And also the ability to hide the buttons. You can now hide these buttons. Yeah, because some people have been accidentally pressing the close button. I get it. You might accidentally hit it, and if you accidentally hit it, it could cost you a lot of money. So yeah, we now accidentally can't hit that because you can hide them away. So if you're not using them, get rid of them. So the other thing we've got is now a swap filter. Yeah. So if you set that to true when you run a test, or when you're trading live with it, basically. Yeah, we now have up here a swap. So if the swap is better than your maximum that you set, so I've set at the moment a maximum of 5. So if the swap fees are 5 or worse, i.e. negative, so that's negative number, -5 or -7 or -8.5 or something. Yeah, if it's more than that, I'm not interested. Yeah, so you can see it highlights the swaps up here for you automatically, and it shows you what they are. So that is -2.7. So if I go short, it's going to cost me $2.70. If I go long, it's going to cost me $5.60. So basically the EA will say, I won't trade long for you, I'll only take shorts. So if we get an opportunity to go short, it will take it. If we get an opportunity to go long, it won't take it. Because if you take a long and it goes into drawdown, you get stuck in it for 6 weeks, that is going to cost you an absolute fortune. As I said yesterday in the live stream, the last quarter I've spent $12,000 on swaps. It's not acceptable. And it's not something that was in existence before, because we didn't have interest rate differentials at the levels we've got now. Interest rates have gone through the roof in the last 2 years, and it's now a massive factor in doing business. So I'm including that, and it's fully automated. So basically, the long obviously is there. So as you can see, it won't take a long. It's just taken a short there, and it won't take any long trades, no matter what I do. Yeah, no matter how good that RSI extension is, it won't take it. It will only get in short. Yeah, so because shorts don't cost too much money. Simple as that. So yeah, so that's another amendment that's been made. Yeah, so it's only going to, it's in sell only mode. The other reason this is good is if there is a better cost, and don't forget, this is not just us, this is the banks also have to pay swaps. Yeah, they set the swaps, they have to pay the swaps. It's an interbank rate, it's a borrowing rate. When you trade, you borrow money. When you buy the US against the yen, you are borrowing money. So this is what swaps are. So basically, it's in the banks and institutions and the market in general's interest to go in the direction of the cheaper swap, because you're going to make more money doing that. Yeah, or rather you're going to lose less money doing that. So in this case, where we've got a swap long of 560 and a swap short of 270, you're going to pay more, i.e. make less, if you long this. So the weight of interest of going in that direction is in your favor as well. But obviously swaps change on a regular basis. So that's the other thing that was introduced yesterday. So I've just been doing some testing this morning on some of the new settings and variations, and basically I'm going to be spending the next month looking at what's happened this year as a kind of retrospect, and looking at where everything's gone wrong this year. And there's multiple reasons it's gone wrong this year and not been as profitable by a long shot. And one of them is swaps, obviously. But the other thing is squeezes. We've had the squeeziest year this year we've had. There's a lot been going on this year. And it's not finished yet. Next week, it's all going to get even worse. But yeah, so I've just been doing some analysis basically on the possibility of this year's price action being the new norm, which is what you've got to do. You've got to basically look at history to give you clues as to the future. Obviously, the future is never going to be the same as the past, but the only way you can really make money in this out of any market is by looking at best and worst case scenarios and probabilities of things that repeat themselves. That's all you have. And then you just apply a risk framework to those probabilities. So it's a case of looking at what has been the worst case scenarios with entry criteria and price movement over the last year and applying a framework to that to make sure that you can survive it. That's it. That's what it's about. It's about surviving in the market and extracting the money when the money is there. When the market moves in a way that gives you money, take it. Yeah. And when the market moves in a way that doesn't give you money, handle it. That's all you can do. Yeah. There's no way you can place a stop loss and a TP on a previous market because there will never be that movement ever again in the future. And there has never been that movement ever in the past. So by applying stop loss based and risk reward based criteria to previous price action that will never repeat itself, you're just wasting your time. It's never going to happen. It's never going to help you. Never going to work. Prove me wrong. No one's come to me with a stop loss based strategy that is consistently profitable. Why? It's not physically possible, is it? Because what's gone on in the past ain't going to happen again. You can apply risk reward discretionary to anything and make money, but picking patterns or pattern based trading isn't going to work, is it? So it's just about trying to survive the extremes of the market movement. Yeah, and that's what I've been working on with the new EA settings. But I'll be spending a lot of time on analysis in these coming weeks, basically. You know, when the market's moving nicely, it's fine. When it's moving nastily, it's kind of got a nasty streak now. It's like the market's got cross. You know, these sorts of moves. I mean, this is Liz Truss. This is the last budget. Yeah. This is what I was preparing everybody for. Yeah. Remember on Wednesday, I said, be prepared for that. Yeah. We didn't get it. Same thing. It was a budget. Same thing. It was a bigger budget than expected. Not the same price action. Not the same market movement. So, yeah. But anyway. Is there a video comparing position trader EA market reverse alerts EA? One uses market reverse alerts, one uses a moving average cross. No, there's not. There isn't a video between. There's a video explaining what each of them does. Yeah, watch both, then you know. For some reason, my updated EA is not showing the swaps on the top of the chart. Turn them on. So make sure you've got it turned on. Yeah, use maximum overnight swap limit to true. Yeah, and then when you apply it to the EA, they appear. If it's not showing straight away, switch currency. Yeah, it works on initialization. All these inputs, yeah, whenever you change an input in here, yeah. So if you change something from true to false, yeah, and hit OK, it won't happen. Yeah, because it all works on initializations. Yeah, so when you place the EA on the chart, it looks at the inputs and applies them. If you change inputs, it doesn't do anything. You have to then reapply, reinitialize the EA. So the easiest way to do that is just quickly switch like that, and then it runs through the whole setup process again, looks at the inputs, and then starts to apply those inputs to your trading. For some reason, my update, I just answered that one. Swaps change almost every day. Yeah. You can't use swaps to backtest. No, if that's what you're asking. No, you can't use swaps for backtesting at all. No. Because the swap, like you say, swaps, it will only show the swap today. There's no historical database of swap charges you could use. So it's for live trading. Yeah. So it's yeah. So I mean, if you look at the whole purpose of it is, like, look at the US dollar yen and look at the swaps on the US dollar yen. I am going to make 955 taking long trades. I'm going to lose 30 on shorts. So I'm just not going to trade short. If you run a back test on this and you find that 70% of the profit generated was on short orders, yeah, you wouldn't have achieved it because the swaps would have eaten half of that profit. So you can't use this in back testing. It's for live trading, basically. I am not going short on any yen pair. My costs on the Swiss yen at the moment are already mounting up. The longer I stay in this thing, the more it's costing me to trade this thing. Will there be a member stream today? No, there's none this week. I'm probably going to change the schedule on those as well, because it's just doing 2 streams a day is just getting too much. I don't get time to do anything, basically, which is I need to be able to deliver content. If I can't create content, I can't deliver it, and I can't work 24 hours a day. So I'm going to have to change the stream. So what I'm probably going to do is do 3 member streams a week and 3 normal streams a week. So we'll have probably Monday, we'll do 1 normal and 1 members. And then on the Tuesday, maybe a normal one, Wednesday members, Thursday normal, Friday members, something like that. Because doing it every day is just too much. People are struggling. People have contacted me that are in the members group. It's only 2 people, but it's 2 people in the members group have contacted me saying they can't keep up, which is totally understandable. Yeah, when you've got so if you join as a member today and you want to go through all the members content, yeah, these are 1.5 hour long sessions. All of it very important. You can't catch up. So it's good feedback because obviously it helps me by not having to prepare so much content every day, but also it allows me to spend more time developing good content that's going to be better quality, really. More about strategy development. Yeah, I've got how many strategies have I got ready to go? So for next week, I've got 1. No, that's wrong document. That one. I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, bloody hell, 18, 19 daily strategies I'm going to be backtesting. Yeah. So for me to prepare and build an EA to develop 19 daily strategies, it's going to take me weeks. If I'm doing 2 streams a day, then trading, then catching up on Discord and everything else, I ain't going to get anything done. I'm just going to come into the live streams and go, what do you want to talk about today, everybody? I've had no time to do anything because people have been talking to me all the time. That's basically what's happening at the moment. So I've got to cut it down. Otherwise, we're not going to get anything done. So, yeah. So I've spent this week preparing that document, which has now prepared me 19 days worth of work because it takes roughly a day to build out a strategy and test it. And that's what I want to do mostly in the live rooms, basically, is try and get this portfolio together of decent strategies that work. Yeah. And it's a lot of work. So can't do the streams every day. It's just not going to happen. And like I say, people aren't going to keep up. None of these streams that I'm doing in the members streams, although they were planned to be an hour, we haven't had one that's been an hour yet, have we? That one is, look, 1 hour, 1 hour 17, 149, 133, 111, 2 hours, 113, 143, 133, 125, 157, 148, 2 hours and 7. Yeah. People are getting home from work and going, oh, right, I'm going to catch up on the members stream. Yeah. They watch that and then they go to bed. There's not enough hours in the day. So, yeah. That all the front end of all this content, the first 4 weeks is basically a of everything you need to know, which is great. So now we're going to work on strategy development more, but I am going to start repeating some of those sessions as well because they're very important. Right. What do you think about the US elections' effect on the markets next week? Chaos. Or not? It's the same thing as I've just looked at, yeah? So look at this pound US dollar. Where are you, Liz? There. Yeah, it's the same. It's always the same with anything that is big like this. This was Liz Truss's budget announcement. Go and compare Liz Truss's budget announcement to the budget announcement we had from this week, yeah? So this week's budget announcement moved the market 182 pips. Liz Truss's budget announcement moved the market 912, 10 ADR, yeah? The previous election we had moved the market quite a bit. I'd have to go back a while, obviously. So we're going back to November 2020. Whoops, too far. There's COVID. So there. Yeah, so that's the last election there. What this election will be, I don't know. You know, it's all to do with what they decide to do and what they think the outcome is going to be. And it's all based on risk. So if Trump doesn't get in, you know what's going to happen. He's going to call it a fraud. He's going to call everyone to arms, and there's going to be a gunfight in the White House or something. You know, it's what he'll do, isn't it? Because he's like that. He's a kid. He throws his toys out the pram when he doesn't get what he wants, and he starts calling people names when he doesn't like them. It's not a politician. He's an idiot, right? If the idiot gets in, the market will probably go, oh, that's good for the economy. If the idiot doesn't get in and he calls to arms, the US dollar will collapse because there's a possibility of a civil war breaking out. No one can tell you what's going to happen next week at all. This weekend, Iran could shoot a load of rockets into Israel and hit a load of UN peacekeepers. The UN is then going to go in and start fighting in Iran. Russia will see that as an opportunity because the Europe is weak to push through Ukraine and start the World War III. You trade what you see when you see it. You can't plan for it at all. There's nothing you can do to see what is going to happen in the future. There's going to be volatility. That I can tell you. The volatility can be three things. There's only three candles that exist in trading. Yeah, there are three outcomes to every candlestick. It will either be a massive bullish candle, a massive bearish candle, or it will be a whipsaw of indecision. That's what's going to happen on Tuesday, stroke Wednesday. No one else on the planet can tell you, and I can't tell you. So what you can do, and what I'm going to be doing, is sitting on my hands and watching what happens. Because if you want to get into a trade, you can either make a load of money or you can lose a load of money, because the chances of you getting your TPs and your stop losses executed at the price you asked for, not going to happen. Because there's going to be so much volatility, you know, and with volatility comes whipsawing as well. So you just have to play it by ear. The best, like I said before, there's three ways you can be into this market. You can be long it, you can be short it, and you can be flat. Flat is the best position to be during these times. We can make money out of regular market movement. Erratic market movement will either make or lose us an absolute fortune. You know, so you can have a really good month and then followed by a really good month, and then you can have a news event that catastrophically kills off the last 2 months worth of profit. If you don't trade the news event, you won't get killed. Simple as that. It's about applying risk, survival. is the key, not getting it right. So who knows? Brokers are going to be using this time, well, not rather, brokers aren't using it, but banks are going to be using this time to move the market as they need to. So it all depends on their positioning, what they've got to execute. But with volatility comes opportunity for banks to make money, and they will do. So Trump is like a 3-year-old with power. Yeah, he is. It's the things like, it was kind of like, he's now suing CBS because Kamala Harris had a video and he's saying that they cut the bit out because she was incognitive, so she needs a cognitive test because she's not a good speaker. I mean, when you look at the two, put them side by side and see which one's the most cognitive. Kamala Harris, Donald Trump. Did you see Donald Trump trying to open the door to the rubbish truck? He couldn't even open the door. And he's calling her incoherent. Yeah, it's just, it beggars belief. How can half the country be behind that? I just don't get it. But anyway, I'm from the UK. We do things different. First of all, we don't carry guns around and shoot each other all the time. Anyway, enough said. The problem, I got already open positions with 10% drawdown New Zealand, pound and euro US. Yeah, so if you're in drawdown, as I am, you've got to control your risk. You can see where my stop is. I'm going to get stopped out. If it goes that way. If it doesn't, I'm not. That's it. The only thing you can control is your risk, your exit. You can control your entry into the market. You can control your exit. You cannot control what this thing does. This is the biggest learning point that people that want to become traders need to understand. You cannot predict the market. I don't care how many times you've seen something bounce at a level. Every time you get to that level, the probability is 50-50 of it either bouncing or not bouncing. You apply risk to the probability and that's it. If you're in 10% drawdown and you do not want to take 20% drawdown, you close it out if it goes the wrong way. If you're worried about it going into 20% drawdown and you're happy to take 10% loss, close it. But I can't make that decision, you do. Yeah, everybody's individual. I took a big loss yesterday on a load of my US dollar CAD. I scaled out loads of it here because I was worried about it crashing through. It didn't. So what I decided to do is put more risk on. Yeah, and now I'm in drawdown on this risk with an average here. If this pushes down, I will get back the losses I made there and some. If it doesn't, I will double my losses. It's trading. This is what it is. It's about trying to catch the move. There's two ways to make money in any market. You either get a high strike rate strategy where it has a very high repeat rate of being correct, and you use risk to get in lots of times, and then you take the odd big loser, which is what position trading is about. Or you basically try and catch the big runner. Yep. So you build a position and try and catch the big move. That's what trend traders do, and to a certain extent, breakout traders. But you will only have a strike rate down here. If you're a trend trader or a breakout trader, you haven't got a strike rate above that. If you have, you're not a breakout trader or a trend trader. If you're a mean reversion trader, your strike rate will be in that sort of area. Mine is 63%. Yeah, that's the two ways of making money in this market. There's only three strategies that exist: trend trading, breakout trading, and mean reversion trading. There is no other strategy. Every strategy that somebody tries to sell you see in a video is one of those three. Yeah, because there is only three things it can do. It can be breaking out, and then it can mean revert, or it can move into a trend. That's it. There is nothing else it does. That is trending. Not very well, is it? But that is a breakout, which was mean reversion and then successful into a trend. Yeah, it's all three strategies. Look, it's a breakout, mean reversion, trend. It's only three things it does. It goes up and it goes down. And during those ups and downs, it's either going in one direction for a period of time, going sideways, or not. That's it. When there's news, it does that. What it does after that is either mean reversion, and then it is range, or it is breakout and trend. That's it. We've got a session in the members on it. You know, you've got to boil trading down into its simplest forms. All these strategies that have got loads and loads of moving parts will never, ever work. Phil, who's just put together the lazy trader strategy, works. Why does it work? Because it's simple. It's got two moving parts, a time of day to enter and a target. That's it. It works because it's simple. You can apply that framework to historical price action and it either does or doesn't have an edge. It's really, really easy. When you've got 3 indicators on there and multiple discretionary target and stop losses, you're never going to repeat it because what you apply it to in the past is never going to repeat in the future. But we do know the market does 2 things, trends and ranges. And during that, it's either breaking out, trending, or mean reverting. Simple as that. That is trading. Yeah. What you do is you apply a risk framework to it. So I'm going short at the moment up here, hoping for a mean reversion. If that trade doesn't work out, I'll stop out on it. But that doesn't mean it's going to break out. It means that the market will move up and stay in its range. Yeah. Which is why people that breakout trade lose. The breakout traders that went long there failed. The breakout traders that went long there failed. The breakout traders that went long there succeeded. Strike rate. What's the strike rate on that? It's all you're ever going to get as a breakout trader. That's the way it works. Maths. It's all about maths. Not maths as in Married at First Sight UK. Maths as in mathematics. For those in the UK watching Married at First Sight, I'm not talking about that. I am watching it though. In the UK, they carry knives instead of guns. Yeah. But you know, if I'm 50 yards away from you, I've got a chance of outrunning a knife. An AK-47, I ain't getting anywhere, am I? I'm dead. And when I get pulled over I've got a story about a friend of mine who went to America on holiday. He was driving a rental car, yeah, and the rental car had something wrong with it. So the police pulled him over, yeah. And in the UK, when you get pulled over, what we do is we wind down our window to talk to the policeman, or we get out of the car and move to the side of the road to discuss what the problem is. In America, if you get out of your car after you've been pulled over, they will point a gun at you and tell you to get on the floor in the middle of the highway and threaten to kill you. Yeah, going to the US from the UK on holiday isn't a pleasurable experience if you don't know what you're expecting. Yeah, that's a true story. Yeah, he got pinned to the floor, handcuffed and put in the back of a cruiser because he had something wrong with his rental car. Just don't expect that in the UK, do you? Guns. Why? Because the policeman was worried about him having a gun. So the reaction is to point a gun at him. Yeah. If he didn't point a gun in the first place, that guy wouldn't be carrying a gun. They don't seem to be able to put that logic together, do they? I scaled out of some of US dollar positions to, yeah. And I can guarantee you, noob, because you've scaled out of those positions, this thing will be down here next week. And it's always the way. I don't know why. I do know why. It's just because it's exhausted. But it's always when you can't go any further, that is when the market makes its move. It's always the case. I'm going to the UK this December, Youssef. London. Yep, you'll be fine. Just stay in the populated areas. We have more problems in London with pickpockets than we do people carrying knives. Yeah. So people's phones being stolen out their hands and people's pockets being picked on the underground is probably the worst problem we have in London. Yeah. In New York, it's whole load of new problems on top of those ones. I had fun with immigration office when visiting New York, giving stupid answers because I thought it would be funny. No, I bet it wasn't. I almost got arrested in Australia. I went traveling around the world for a year. And when I went to Australia, I didn't realize you couldn't take fruit into Australia. And I had some fruit in my, it was in a bag, but it was dried fruit in a bag in my suitcase. My God, you should have seen I had Alsatians next to me. I was over there. We had 2 armed police officers next to the customs person and going through my bag. And I was like, I'm a student from the UK and I bought some Singapore fruit because I went from Singapore to Sydney. No, I didn't. I went to Perth. Oh my God. But they all carry guns in Australia as well. All the police are armed over there. But they don't have the same shooting problem in Australia, do they? Because it's different law of carrying guns. Anyway, we're not going to talk about gun law. It's not what this is about, is it? You can agree or disagree. It's a fact. We don't have a problem with people getting shot. I do aggressive drawdown control on the US dollar CAD now to reduce risk. Yeah. So that's all I've done. I've scaled out of some of my trades on the US dollar CAD. And obviously I got out here and now it's doing this. So I've added more risk back on again. And the risk, if this trade works on these positions, will pay for the drawdown I've just done. So I'm not going to come out of this with a profit. If I can come out with a small loss, that's an achievement because the trade is wrong. This is the thing, you know, with position trading, you're not right, you're wrong. I'm still wrong. I'm totally wrong on all of this. This is all wrong. I'm still taking a loss. I'm just not taking a loss 90% of the time because I'm getting stopped out. I'm taking a loss every now and again. It's part of the job. But we don't get stopped out every day because we're using a stop loss, do we? My friend, his phone was stolen a day later. A day later, it was in Algeria. Yeah. I said, you know what? This world that we live in is just not fun anymore, is it? Just don't want to go out of the house. It's too dangerous. Just see what's going on with these before we go. So DAX, 2R on the DAX. I've got 400 there, which will put me down £89 on the morning, which, to be honest, with what's happened with the FTSE this morning, isn't a bad result. So what I'm going to do with my DAX, I'm going to put both TPs there, which gives me £700. So that TP there is 700. The hedge is 489. So if we can get there today, it's a clear 300. No, it's not. 200. Do the math. Not maths, math. So yeah, so that cleared me 200 this morning, which is a result. This afternoon, I won't be trading the US indices at all because of the news. So 12:30, which is an hour before market open, we've got all of this. The market will go crazy. All the indices will go crazy on that. So the volume will have been done. So the open is usually quite lackluster. So I'll be out of that. Also bear in mind, if you're trading the indices, we had the clocks change this week. So now it's 1:30 in the afternoon for the US Open. They changed their clocks on Sunday. So we're back to 2:30. So we have this weird week twice a year where everything goes out of sync and then it all comes back into sync. So next week, you need to readjust potentially your time settings and your EAs to just bear that in mind. US dollar CAD is showing an ascending triangle on the weekly. It may be. Yeah. But this is the thing with technical analysis, and this is why I keep going on about fundamentals. Yeah. I don't care if this is an ascending wedge. If you're a technical trader, this is an ascending wedge and you will be looking for a breakout long on this. Yeah. If you don't know what's going on Tuesday next week and this thing goes like that, as a technical trader, you'll think, oh, that's just one that didn't work. As a fundamental trader, you'll be looking at this and going, the elections caused that collapse. Technicals have nothing to do with market movement. Yeah, technicals are caused by market movement. Yeah, the market moves up and down and creates patterns. It doesn't move up and down because of patterns. If this thing goes like that next week, it won't be because of that. The course you bought that taught you about ascending wedges will be going, there's another lovely example of a successful ascending wedge. I'll be looking at and going, Trump got elected. Whether or not this ascending wedge works is down to Tuesday's election result, not the fact that there's an ascending wedge on this chart. It's nothing to do with it. If there wasn't an election next week, it would be due to the interest rates and inflation and the war in Russia and everything else that drives this market up and down. The fact that they are hitting a level here which is resistive and has been resistive that many times, to me, is whackingly bearish. Yeah, because they can't get through that level. Why? Because there's no price discovery element in play to go and trade above that level. The markets do not want to trade above that level. If they wanted to trade above that level, we'd be above that level. The markets want to trade lower. Yeah, we've got bullish price action at the moment. Why? Because there's an election coming up. Because interest rates have come down and are due to drop at a slower rate, which is bullish. Oil price has been collapsing. What does that do to the Canadian dollar? Sends it down, pushes the US dollar CAD up. Yeah, election, oil price, lower interest rate, lower rate of change and drop on the US dollar interest rate. This is causing a pattern of bullishness over this period of time. It's got nothing to do with next week though. But, you know, you have to have a reason to get in. And I totally get the fact that people see patterns playing out every now and again. Yeah. It happens. But it doesn't happen because the pattern's there. It happens because the pattern is there because of a reason. All patterns are results of price action. So price action is caused by intraday bank movement. Intraday bank movement is caused by supply and demand of order flow. Supply and demand of order flow is caused by commercial orders, pension funds and hedge funds, and speculative traders, which make a small amount of that movement up, who are looking to make money. Yeah, all of that goes into a pot to give you a bias of long or short based on order flow for the day. So if the order flow is more orders long than short, we will go up. But if that is continued for a period of time, you will continue to go up for a period of time. But if during going up for a period of time, you get to a level where there is an iceberg order of the market not wanting to exceed that level because it's bad for the economics or bad for the fundamentals, you will create a pattern. But what happens there has nothing to do with the pattern. It's to do with the next batch of order flow. Another dude spamming me on Discord with your name. I love to muck around with them. Yeah. Have you seen on Discord, I've changed my avatar. I signed up for Nitro yesterday. So now my posts and my name is pink. If my name that contacts you is not pink, yeah, this is me. I am now pink. And I have an animated icon with a gold ring around it. Yeah. So if whoever contacts you doesn't look like this, it's not me. I'm trying to make myself look as different. If the person contacting you, the spammer, has not got Nitro and they haven't got access to this unique thing that I created, it ain't me. There's nothing I can do about these knobs. But, you know, if anybody that knows me knows that I'm not selling crypto, and that's what they're selling you, crypto. Give yourself a role. I have got a role. I'm a server booster and an admin. Give yourself a role as admin and let it show on the memo. I am an admin. I'm the owner. Is there another role? I could give myself a role of admin, I suppose. I don't know. Add a role. Admin. There isn't a role of admin. I'd need to make a role of admin, wouldn't I? It doesn't matter what I do, Yusuf. Yeah, I have posts that go out every day in Telegram telling people that There's scammers around, and I will never contact you. And then someone contacts them, and they contact me saying, I just paid you $100. And then I point them to that post, and they go, I didn't read that. Doesn't matter what I do, people don't read stuff. Doesn't matter what I look like, people will just respond. Some people, dare say it, are just stupid, and they're going to get scammed. I can't help them. Discord is different. You need to create one. Oh, does it? All right, okay. I can create an admin role, I guess. But, you know, like I said, I can make myself an admin. I can change my avatar. I can change the color of my name. But someone will contact you that looks like me, and they will still give them money. And I turn around and say, you're an idiot. I'm sorry. You're not going to get on very well in this world if you are scammed by people that promise you the earth. The one at the moment going around, somebody sent me, is that they are promising 100% return per day. Per day. Yeah. You give me £1,000, I'll give you back £2,000 every day. Yeah. If you believe that, you deserve to have all of your money stolen by these scammers. I'm sorry, but you do, because you're an idiot. If that was, I don't understand how people believe it. Yeah. If that was the case, do you think anybody on the planet would work? If there was a way to take £1,000 and turn it into £2,000 on a daily basis without running a business, do you think we would all be doing this? Do you think I'd be sitting here now? You'd be watching me? No, we'd all be millionaires. But if we're all millionaires, what's the point in having money? We'd be in the Star Trek universe, wouldn't we? Because money's pointless. If I've got $1 million and you've got $1 million, what's the point? How can we buy stuff? Because I don't need to buy stuff, because I've got an unlimited supply of cash. Because I can create a double. I might as well just put 20 million in today and make it 40 million tomorrow. And then I've got 40 million, you've only got 20 million, so I'm richer than you. Doesn't matter. We can all afford to buy multiple yachts per day. Yeah, people I just can't get my head around it. I don't know. I don't understand how you can be so stupid. I don't want to be horrible to the people that get scammed, but isn't it obvious? I don't know. Only two possibilities. One is stupid and get scammed, or you've got a brain and see it's a scam. That doesn't make sense to understand. I don't know. I just don't know. I can't comprehend it. It's one of those things, I just can't get my head around it. Yeah. Lee comes in here every day and says, this thing's random. If you're lucky, you get 5 to 10% a month out of it consistently. And then he messages me and says he's got a way to double my account. Have you? No, I just can't. I can't comprehend it. So if they have a gold ring around their logo, it's safe for you to send them all my Bitcoin. Yeah, absolutely, James. Yeah. If you've got a gold ring, if the person that contacts you got a gold ring, it's very easy, right? Go into any of my posts on Discord. It's so easy. And this is the thing I don't get. Yeah, it's so easy to work it out, right? If somebody contacts you by a DM and it says the market structure trader, yeah, click on this, and then you can't do it. I can't do it to myself, but send message and ask if it's me. I will say, no, you idiot, it's a scammer. And there you go. You'll have your answer. But people just don't think about it for some reason. And I just don't know why. I don't know. I've never been scammed in my life. Maybe I'm just overcautious and it's a regular thing. I don't know. I know they make a lot of money, but I can't help. I just can't help. I can't stop it. We all can't get our head around it. No, I know. But you're intelligent people. Half of them say I've been scammed. I'm a big. I am being stupid and got many times scammed on Telegram. I can't help you, Cheyenne. Why did you get scammed? I don't know. Maybe it's a generational thing. I don't know. I come from a generation of people that have to work for a living. Somehow, maybe there's a generation out there that believes that they don't have to work and they can just make money somewhere on the internet using artificial intelligence without actually lifting a finger. I don't know. This is a job. I think the problem is people don't see trading as a job, do they? They see it as gambling or I don't know, fun, hobby. I don't know. Maybe that's what it is. And then I don't know. I just don't know. I just don't know. Because of all these gurus. Yeah, that's part of the problem. But then again, I look at, I've got a logical brain. I think most people have got a logical brain. I think this is the thing. Most people are logical, yeah? If you watch a video like Mamba FX, for example, not picking on him for any other reason, then obviously if you look at him, you know he's not a real trader, yeah? I know he's not a real trader. But, when you look at that, yeah, and you see someone like that trying to sell you something, he's a guru. He's not a trader, is he? Yeah, look at him. How many traders do you know that look like that? None. Look at his house. Yeah, I've been on holiday to places like that as well. I've got photos of me in places like that my wife's taken of me on holiday as well. I've also stood in front of some very nice cars at Goodwood, for example, when I go to the Breakfast Club car shows. Yeah, I've stood in front of some of those as well, and I've got photos of me in front of those. I could populate my entire Facebook feed and my YouTube channel with those photographs. Yeah, I don't own the house. I don't own the car, but the perception will be, because you're stupid, that's where I got the money from. Greg Secker. Yeah. Oh, where is he? There he is. My friend Greg with the eye makeup, sitting in his lovely big house, all earned from his company that sells training courses, with his monitors, which are owned by the business that sells the training courses, telling you he'd made all the money by trading. Sorry, not the case. Go and look at company's house. Look at his business. Yeah. But I don't know, they made this there's a generation that have grown up with YouTube that haven't got this too good to be true alarm. I think that's the problem. They haven't got the too good to be true alarm because they've been brainwashed by people telling them this is how it works. I guess that's what it is. That idiot got 1 million views. Yeah, he got 1 million views. I could get 1 million views by marketing. Yeah, I can spend £100,000, right, next month, and I could get 2 million subscribers on my YouTube channel and thousands of views on my YouTube videos. But I do it by spending loads of money to generate a channel that looks good, which will attract people, and then I earn revenue from making videos. Yeah. Not earning revenue from trading, earning revenue from making videos. Big difference. It's just, this is why I haven't got, this is why there's, how many people in here today? Don't know, not many. 48, it's 48 people in here today. The reason there's not 2,000 people in here today is because I'm not marketing. That's it, simple as that. And nobody's interested in what I say. Most people aren't interested in what I say because I'm not telling you I'm going to double your account next week because that's what you want. I also want to win the lottery, but that ain't going to happen. I don't buy tickets for a start. The best thing is that you can see when the user has joined Discord. Most of them have only been there for a few weeks. Yeah. Yeah, there's lots of yeah, but you're clued up, noob, aren't you? Noob is clued up. But that's the thing. You're clued up on how it works. Some people just don't, you know. It's just, you know, I don't know. Nick Sean is on the suggestions. Yeah, Nick Sean, he's another one. Yeah, again, I've done a session on him. You know, I've just been through my opinion on guns. Yeah, not being funny, but what's that got to do with trading? If you were a trader, why would you do this? He sells courses that tell you how to blow your account. Yeah, fake. It's all fake. It's all a load of bollocks. The guy's never made a penny in his life. Blown multiple accounts over and over again. Yeah, but he gets 30,000 views, which pays him a little bit of revenue for YouTube. That's it. That's how he earns his money. Or they come from a trust fund and they get the money that way. Money makes money. If I had £1 million, I would make more money. because I can just make money with my money. That's how it works, isn't it? This is why we have this gap, this income wealth gap, which is growing exponentially like this. Because the more money you have, the more money you make, which means the more money you make, the more money you make, the more money you make, the more money you make. And it's a never-ending thing that goes up. You can't spend enough money per day, week, or month than you earn. Therefore, you exponentially go up. And the only way that happens is by taking it from the people down here, yeah, that can't do this. So there's this massive wealth gap growing where you've got 1% of the population earning 99% of the wealth. And it's people like this that just create wealth from other people's, you know, they basically, those people are being paid by YouTube. YouTube is being paid by advertisers who are wealthy. Money is making money. It's a money spiral. I'm using money to make money. I'm using capital to generate capital, but I can't generate it in the sums that these people talk about because it's not possible to do. If it was, all the banks would do it. They don't, because they can't, because it's not possible. Everyone wants a doubling account. Yeah, I can double an account. It's not a problem. I can double an account. Yeah. Right, these trades that I have on at the moment, yeah, as it goes down, I could add another one. As it goes down, I could add another one. And what I could do is I could risk 5% every time. And if Kamala Harris wins the US elections next week, I could treble my account by risking 15 to 20%. All it's got to do is move 5 ADR and I'm done. Anyone can do that. But what am I doing here? I'm playing the probabilities. What are the probabilities? That. I have a 50-50 shot of making doubling my account every day. If I put 50% of my account risk on one trade, give it 1 ADR to move that way, and give it 2 ADR to move that way, I can double my account today. The US dollar Swiss today gave me the opportunity this morning to double my account. Nearly. It's done 175 ADR. But if I got in long this morning when it opened, yeah, sorry, short. Long this morning when it opened, I'd have doubled my account. If I'd have risked 50% of my account here this morning, I would be 150% up. But you can't sustain that because when you get it wrong twice, you don't have an account anymore, which means you are no longer in business. I can sell you a course on doing that if you like. I just told you. There you go. There's your course. That's what you do. If you want to double an account, you press the buy button at 8 a.m. Yeah. And then you come back when it's moved 2 ADR in your direction. Or you get stopped out. And then when you get stopped out, you press the button with the same risks again. If you get stopped out the second time, you're dead. But hopefully one of those 2 times it will move up by 2 ADR. That's the course. Caveat at the front of the course. 99% of people blow their accounts using this strategy. Yeah. And that's exactly what he does. Yeah. The front of every single one of his courses, in every single one of his videos. Yeah. It says basically, I don't know where it is, but it's in there somewhere. 90% of people will blow their accounts. Of course they will. Because he's using high risk and gambling. But that's what they all do. That's why I don't do that, because I'm not interested in promoting that sort of behavior. It doesn't work. The support and resistance with compounding, now he's doing DCA. Yeah, he's moved over to my strategy because the previous 2 strategies have blown. He's lost all his members and now he needs new members. So he does a new strategy. It's the cycle. Again, I've got a video on my website about it. Yeah, it's this cycle. Look. This video is the most important video you can watch. Basically, if you watch YouTube, that is the most important video on the planet, because every single one of those is the same thing. It's trying to give you a framework to extract money from a 50-50 probability. Over and over again, you will try and do different things, applying it to the same market. Doesn't matter what you're trading. Oh, I'm not going to trade Forex anymore. I'm going to trade gold. Gold still has a 50-50 probability every time you press the button. I hate to say it. I won't do that. Then I'll do DAX. Still 50-50. Oh, I'll use a FTSE. 50-50. All right, I'm going to trade government bonds. 50-50. Oh, that course didn't work. Okay, what? I'll do a new one. Oh, that didn't work. I'll tell you what, I'll do a new one. Oh, that didn't work. I'll tell you what, we'll go back to the original one. And this time I'm going to use the stochastics, not the RSI. Oh, didn't work. Oh, okay. Well, this one here, we were using support and resistance. I know. We'll put a block there instead of a line and we'll call it supply and demand. Didn't work. Everything's the same thing. It's telling you to do the same thing in a different way over and over and over and over again. You're stuck in the cycle. That's all it is. What's with the video on that? What's what? What's with the video on that? I don't know. Don't know what that was. Oh, the gun thing. You're talking about Nick Shawn? Yeah, basically he's just brandishing firearms. It's clickbait. It's all just clickbait. And he's basically position trading now. But he's position trading with risk that is, you know, right, so one of his videos, this would be interesting to see actually. One of his videos, he started to scale in because I watched it because somebody sent it to me. He said, somebody sent me a video and saying, guess what? Nick Shawn's in the same trade as you. But do you know what? He was in with 10% risk. Do you think he's still in it? I wonder if his members, anybody of his members maybe, can tell me if he's blown that account yet. Because it's continued up for 2 weeks. So he'll stop doing that course and he'll sell another one. I was so emotional after losing money, and then there were people posting about making money and wanting to help. That's how I got trapped. Yeah. I get them all the time. The people that say, "Are you in?" I get these ones in more in Telegram than in anywhere else. Have you got any? Hi, I blah 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 blah. I see you in the group. How are you doing with the strategy? Oh yeah, not too bad. Have you got any trades in drawdown at the moment? Well, yeah, I have at the moment. I've got a few trades in drawdown. Oh, right, okay. I've got a way of getting out of those. I've got this strategy that automatically gets you out of drawdown trades and just basically gets rid of the losses for you. Really? That's where they get you, because they're playing on the fact that you're losing money, and they have a way to get your money back. But to get the money back, you have to buy something. And obviously the thing that they give you blows your account. Yeah, because there isn't a way to do that. The total, Shyam, the total gain is 168k. The total loss is 194k. There you go. I need to say no more. There's something not right with the retail sentiment table. Yeah, I was shutting it down. This is closing. Today, actually. Beginning of the month. I'm shutting this down, not using it anymore. UK manufacturing in recession, 49.9. Is it? Don't know. Don't follow that one really. Not an important figure really. We don't UK manufacturing. We don't really make much. Manufacturing figures are only really relevant to countries that manufacture and export. We do manufacture and export, but that's not our main export. Our main export is financial services. So the UK doesn't get affected by UK PMIs, which is why, if they have just come out, you will find they are yellow. Yeah, it's not important. The video on the Dublin account. What's the video on that? The Dublin account. The video on the Dublin account. I don't know. Don't know what you mean. For NASDAQ and gold, the ADR setting cannot be 0.25. Any recommendations for gold and NASDAQ setting for the position trader EA? What do you mean it can't be 0.25? ADR is ADR. There's no setting for ADR. ADR is ADR. It's a fact. There isn't a setting. Average daily range is average daily range. It's not something that's configurable. There's no inputs. Apart from the number of days you're going to look back, that's the only input. Percentage to risk one ADR. You're talking about the position trader EA. So the percentage to risk over an ADR is up to you. There's no ideal. It's whatever you're comfortable with. Obviously, the more risk you have, the more chance you've got of getting into trouble. So risk whatever you want, whatever's the best thing to do is test. So let me test gold. Look. So if I test gold with 0.25% with these settings that I've got set up and run it, we'll get an outcome. If that outcome is acceptable to you and the amount of risk it gets into is acceptable, brilliant. If it's not, use lower risk. Gold is not a good thing to position trade for a start because gold trends a lot. And obviously mean reversion strategies aren't suited to trending markets as much as they are to more mean reverting and range bound markets. So this is just a US dollar cross. The gold is a US dollar cross with the added complication that it's a commodity US cross, which means that when commodity prices, when a specific commodity is in demand, it will trend. If at the same time you get, let's say, for example, you get gold supply restricted and demand stays the same, gold price will go up. If gold price tends to go up at the same price as the US dollar is collapsing because of an interest rate drop or something, then it will go up parabolically. But all the other US dollar crosses won't go up parabolically, which is why it's harder to position trade. And also, you do not want to be longing gold. You want to be shorting it because the long swap is 29 and the short swap is 3. Risk is a personal thing. Yeah. So there isn't a best risk to use. Risk is risk. If you risk more, you have a chance of losing more. You have a chance of winning more. If you risk more in position trading, you have a higher probability of an account blow. So you adjust your risk for the instrument. So for example, one of the things that I'm looking at the moment is risk allocation on instruments. So with my particular portfolio over the last year, I've done very badly on the Swiss, I've done very badly on the yen, and I look back and I've always done very badly on the yen, but most years it's profitable. So what I'm probably going to be doing next year and adjusting because of what the market conditions are at the moment is allocating risk to the yen pairs, but reducing the risk. So I will still trade yen pairs. Now we've got positive interest rates starting to move into the yen for the first time in 2 decades. I think it's probably going to start to trade a little bit more freely rather than trendy. So I'm going to allocate some risk to it, but I'll probably allocate half the risk I allocate to the other commodity and service-based FX pairs because they are much more fluid, therefore more movement, therefore easier to position trade. Gold is a commodity. So like you see, this move here, if the demand for gold remains high and the supply is constricted, this will continue to do that. And it will continue to do that until that situation changes. The same as oil. If a war breaks out, oil goes up. If the war continues and escalates, oil goes up. If the war stops, oil will come back down again. If a war lasts for 3 years, oil will go up for 3 years. Not good for position trading. Look at that. Not something I want to get involved in. It can be very dangerous to trade gold. Intraday, absolutely fine. And if you want to intraday scalp, so if you wanted to just trade ADR reversals on gold, yeah, probably. I would, with gold, I would probably look at getting in on very big extensions with quite small targets. And try and use something like an ADR scalp. So wait for those big parabolic moves. You're not going to get as many, but when they do happen, it's probably a more reliable way of trading it. But even that trade there, look, took a couple of weeks. But most of them you'll find are singles. Yeah, I mean, I just don't trade gold. I know. I've got a video on my website about it. Why I don't trade it? Because I lose money on it. And if I lose money on it, I don't want to trade it. Just moving my stop right under that low on the DAX. In fact, I'm just going to trail it on 200. So basically, DAX has paid for the FTSE. So I'm up to 538 on the DAX, 489 on the FTSE. So that's paid for that. So I'm just going to put a tight trailer on it. If it does get to target, great. If it doesn't get to target, I'm just going to take a break even on the 2 today. So yeah, I mean, that's not a bad set file for gold. Up 7.5 grand. ADR reversal. Recommendation for the FX pairs for the position trader EA and where to find the recommended EA set file. There isn't a recommended. Use the defaults. Vantage. Test. Again, we were talking earlier about stupid. I'm not saying you're stupid, obviously. But I would never, ever put any of my money into anything that I haven't tested. Yeah, it's your money, right? Don't take my word for it. Don't take my word that this test I've just done on gold, this test I've just done on gold over 4 years has generated $8,000 of profit with a $9,000 drawdown with a 71% strike rate. Don't take my word for it. Go and test it. Yeah, test it for yourself, prove it to yourself, then trade it. Don't ever take anybody's word for anything in this industry because, as I've just said this morning, 99% of it is shit. It's rubbish. It's lies. Yeah, I produce products that have every input configurable so that you can fine tune it to you as a trader. There isn't a best way to do something because I don't know what is going to happen in the future. I can produce set files and I can give you for the position trader EA, I have a 40,000 set file bank of profitable strategies on every FX pair, apart from the yens and most of the Swiss. So anything that's not yen or Swiss, basically, go and test it yourself. You'll find it very hard not to make money unless you use massive risk. Yeah. But I can give you a set file, but I have no idea if it's the recommended one for you or the right one to use in the future because I can't see the future and I'm not you. You have to go and get this, reset it, change the risk, change the scaling, change the multiplication, change the exit targets and test all of this. Yeah, it all works. If you leave it on default settings and stick it on pound odd and press the button, you'll get a positive equity curve out of it. I don't know if it's the best. It's just one. It's a set of settings. Yeah. But this is what the market does every day. This is all it does every day. It goes up and it goes down. So all this EA and the strategy is doing is saying, if the market goes up and down, we will go up and down with it until we have a profit available, and then we will take the profit. We don't know how long the trades are going to last. We don't know how much drawdown we're going to go into. We don't know what the cost of doing business are going to be, but we know that the market is going to go up and down because for the last 100 years, that's all it's done. When the market pushes, the banks and institutions take profit on their trades. When they take profit on their trades, it reverts back to the mean of the move. The mean of the move then becomes a support for a trend, or it becomes a reversal. That's what we know. Those are the facts. Other than that, you apply a risk framework to market movement. You extract money when there's profit available. When there's not profit available, you can scale out and take a loss, as that just did, and then wait for the market to come back in your favor and then take the profit. But how you scale out is up to you, because I don't know what your risk tolerances are. But look, test, find out what the risk tolerances are that the strategy that you have programmed into the EA does, and use it. And if you don't like it, don't use it. That's it. That's Liz Truss in 2020, causing chaos in the markets. So it's going to make a loss. Did we know Liz Truss was going to crash the pound? No. But what happened after she did that? The Bank of England bailed us out. We got out. I don't know what's going to happen in the future. I don't know if there's going to be another Liz Truss moment. I don't know if the UK is going to go to war. I don't know if we're going to have a tidal wave hit the UK because of global warming. All of these things are going to affect the distances and the speed and the volatility of this thing that we are trading, which is random. So you apply a risk framework to it. The position trader EA applies a position trading risk framework to price movement. There is no way of telling you what's best. No one can know. Yeah. Next Tuesday is a prime example. Is Trump getting in or not? The US dollar is going to do something very, very different depending on who gets in. It may do nothing. We don't know. It may do absolutely nothing. It might move up 2 ADR and down 2 ADR and then sit back where it started. Yeah. Had to take some loss. But you could say, I want to take loss 3 times there on that position, which lasted 6 weeks. And again, this is one of the reasons we need that swap filter. That would have cost an absolute fortune to hold that. But, you know, look at the P&L on it. We're up 11k. Brilliant. But we've taken roughly 7k a drawdown. So can you survive? I mean, this is obviously on our just using 100,000 as a test. But you've taken 7% of drawdown. Are you comfortable with 7% of drawdown on your account? If the answer to that is no, reduce this down to 0.05 and you will take 3.5% of drawdown on your account. If 7's fine and you're only going to trade 2 instruments, you're happy to take double that, set that to 0.2. You will double your drawdown. You will also double your profit. Yeah, again, this is all discretionary. There isn't a best thing to do. I have to set it at a level. But it's up to you what level you set it at. And when you test, yeah, when you test all the N pairs, and I won't run a visual on it. I will run a visual on it actually, because it's worth looking at. When you test all the yen pairs and you realize that every single yen pair squeezed for the last year, and if you go back to previous years, has also squeezed or been range bound and not gone anywhere. When you realize that yourself, not come to the conclusion that I've told you that happens, that you can see that happening, you will decide that I'm not going to trade yen pairs in the same way that I've decided I'm not going to trade gold with this methodology. It doesn't mean you can't trade gold, just don't position trade it. Use a stop loss. And again, you can use the EA to use stop losses. So you basically tell it to use drawdown control and you say, when it's moved half an ADR or an ADR against me, close 100% of the position. And it will just, it's exactly the same as using a stop loss. Same thing. Yeah. Somebody asked me the other day where the stop loss settings are, which obviously they haven't watched the video, but there isn't a stop loss setting. But if you're risking 750 over 1 ADR, if you set drawdown control to true and at 1 ADR close 100% of the position, basically when it's moved 1 ADR, i.e. a 1-to-1 risk reward ratio against your initial risk, it will shut the whole position out. That's a stop loss, isn't it? It's just not a physical line that's placed in there. It's just when it's moved 1 ADR, it will close it. That's how you do risk reward. We just don't use physical stops because they get stopped out. This is going to prove me wrong now, isn't it? And the yen's going to make a load of money. It won't. It'll get hurt at some point. It's the yen. And that's where it gets you. It's just the hemorrhage of constant trend. It's not suited for trend pairs. But this is the thing. Like I said, the yens have changed now. The yens, we were on a 20-year negative interest rate freeze. We've come out of that now. We're now changing interest rates. So the yens, quite possibly in the next year or so, are going to be very nice tradable instruments because they're going to move more. But interest rate differentials at the moment are still far too big. Key fundamentals. The interest rate differentials between the yen at 0.25 and something like the pound, we're still at 4.75 interest rate differential. That's why your swap fees are so big. Yeah, if that jumps up to 1.75 and the pound is sitting down at 3.25, yeah, our interest rate differential is very different. We're only 1.5%. That's tradable, and that will move. The reason it's only done that is because there's absolutely no point in going long on the yen, because you're not going to make as much money as going long on the pound. Therefore, the pound yen has always gone up. Same as the US dollar yen and every other yen pair. But that is changing now for the first time in a long time. So we're going to find a very different yen, I think, in the next year, if they continue to do that. When was that? $2022 in December. Oh, that was the intervention, was it? Was that the intervention? December 2022? Oh, I can't do it. Yeah, there. Second intervention. Look, that was the first intervention. That was the second intervention on the yen. That's what we just saw fly past on that chart, which is why we're in so much drawdown. Because that intervention. Again, are we going to get an intervention? That is going to make a difference to your future P&L. And there's nothing you can do to predict that. Random. So all we can do is apply risk. And get stuck like this until we don't get stuck, and then we get out. It's very simple, isn't it, to understand, but to do it, different kettle of fish altogether. Morning, Harold. You're late. I'll leave it there today. There's not much else to really discuss today because it's all about non-farm payroll. So I'm going to get out of this with a nice break even today, possibly a couple of hundred profit. Everything else we need to basically just kind of sit and wait for today and see what happens with the non-farm payroll numbers. So we're looking at the interest rate, the unemployment rate today. And either we're going to rally it or we're not. So we'll wait and see what happens. But there's nothing we can do about it. It's just a case of sitting and waiting. So I will be working on the stuff for next week. So I'm going to put a post up in the members area about what we're going to do next week. I'm going to do a little bit more testing on Phil's strategy because that's looking pretty good. For those members that are in here, I did a system parameter permutation test on Phil's stuff yesterday. I did 96 tests, testing exit time in days, ADR distance between entries, and the maximum number of trades. So 2 exit criteria, either close out after a number of trades or close out after a period of time, whichever one gets hit first. And I wanted to test the distance between entries between a quarter of an ADR and 1 ADR. So as you can see on a lot of pairs like Aussie CAD, 100%, not all 96 strategies worked. Yeah, and this is what I mean, Vantage, with the position trader EA. Each set file is a strategy. This is what we call a system parameter permutation test, which is 96 different variations on the same strategy. So it's 96 different strategies. All of them are profitable. Every single one. Yeah. Aussie dollar Swiss, all of them profitable. Aussie dollar yen, none of them profitable. Aussie New Zealand, none of them profitable. Aussie US, all profitable. Yeah. So none of the yen pairs worked. But with most of the major and minor crosses, excluding Swiss franc, there's 89 out of 96 there. Looking good. So it doesn't matter what we were discussing in the members group yesterday about whether you use a 23, 30 or 50% retracement. Doesn't matter. It doesn't matter really how far apart you scale in. It either is going to retrace or it's not. If it doesn't retrace, what we're looking at is how quickly should we be getting out? How much breathing room do we give the trade? And it also doesn't really matter. It just works virtually all the time. So I'm going to do some analysis on this next week in one of the sessions. I need to spend a bit more time putting a portfolio together for the quant analyzer. But yeah, it's looking good. But it's not going to work on yens and Swissies at all. It's just not worth even incorporating them. But everything else, yeah, I like. Getting out fast seems to be the way forward as well. So I will do some work on this and I'll publish it in the members group. But I need to do a bit of more analysis on it. And obviously we'll do a session on it next week. All right, so have a good day and good weekend. I'll be back on Monday. Anything you need, I'll be in Discord. Yeah, good luck today. It's a make or break today. I've got a feeling personally that we're going to be doing this until Tuesday, but we'll wait and see. All these US pairs, we'll have to just wait and see what they do. But we've got some movement on the pound today so far, so we'll see. All right, have a good one. Anything you need, let me know. I'll be back on Monday. Have a good weekend if I don't speak to you before, and I will see you next week.